What is up, YouTube? Welcome back to Stacks by the Numbers, and I wanted to do a quick look here on two stocks that are reporting earnings today. First company, GameStop Corporation, ticker symbol GME, listed here on the New York Stock Exchange. Stock right now, $15.13, up 1 cent right now, basically flat on the day. Had a pop just the other day here on Monday, and now you can see Tuesday, today we're essentially flat, up and down, just kind of middle of the road, sitting right there after the rejection. This is 1 year after the rejection, it looks like, off of this top fib here at 1523. Looks like it wasn't able to hold. However, there's still about 2 hours to go, so anything can happen. But in my opinion here, looking at these numbers, we can see estimates of 2.05 billion. Company expecting to go EPS positive of about 29.5 cents. Supposedly they cut staff, closed a couple of locations. So in my opinion, as I've kind of said long ago with GME, in my opinion, making these moves to try to boost up your profitability while you're losing market share and seeing declines in revenue year over year, quarter over quarter, in my opinion, it's it's like they have a massive stab wound and need a bunch of stitches, but for now they're just kind of patching it up with a couple of band-aids. And that's, I know, kind of a wish-washy kind of analogy, but in my opinion, to try to, again, increase profitability, to try to offset the fact that the business is potentially dying, in my opinion, I really don't know if that can help keep the stock up, if it should warrant a stock that should go higher, or like I said last time here, after they posted earnings, again, you can see a really nice beat on the EPS side with a big surprise of over 100%, but they missed on the revenue side by over $100 million, almost 9% miss on the revenue side, which again is basically why we had the short-lived little rally here up to the 18s and change, and then we immediately gave it back and hit as low as 13 coming into these next earnings. Because in my opinion, as I laid out previously, I just feel like this company cannot sustain itself currently. We have a $4.6 billion market cap on a company that is very, very inconsistent. Now, if we look at the revenue to market cap comparison, we could potentially make the argument that it's undervalued. However, again, I told you that most stocks trade at higher multiples, in my opinion, because they're rewarded on their consistency. And GameStop has been very inconsistent, basically on the revenue side, because as you see here on the EPS side, we have 4 beats in a row here. However, of course, over those quarters, the stock is down. So obviously, in my opinion, you would use simple logic and common sense to come to the conclusion that it's really not about the profitability. And as you see here, Q4, I understand, holiday season, there's an extra week in this quarter for the company. So, you know, maybe they had the ability to make a couple of extra bucks. Of course, we know that earnings are 100% a gamble, so anything can happen. But you can see here that 2.23 billion coming in for Q4 of 22. Now estimates of 2.05 billion. So we're talking about a drop year over year in revenue of about 10%. So that's why even if the company happens to meet or slightly beat that number, in my opinion, I'm still personally long-term bearish on this stock. And chances are, in my opinion, if they do miss these numbers, it could potentially drop down to about this $10 level and potentially even lower here to about the 960s and potentially touch the bottom trend line here of this range. Again, we have been in this descending channel here for a very, very long time. This is going back to March of 21, and you can see we had the 4-for-1 split. They also issued new shares up at $50 a share. Now the stock's down here at 15. Supposedly, what was it? Ryan Cohen, I believe. Hold on, let me find the article. Ryan Cohen. So this guy basically talks about GameStop doesn't provide guidance, and some investors still treat the video game and collectibles retailer as a meme stock. Again, I said, in my opinion, that massive short squeeze with the float of over 100%, that is done. That is why the stock had that massive squeeze, that massive explosion. I'm hoping a bunch of people made money on it. And then basically from that point, the stock has been down for years, basically resuming the track it was originally on. Because again, I understand it was an anomaly. People forced the short squeeze. People made a couple of bucks. But I mentioned, again, in my opinion, similar to Beyond Meat, BYND, right? We had that massive explosion, big short squeeze, and then what did I say? I said, in my opinion, it's probably going to immediately give it back, because in my opinion, if I was on Wall Street looking to short a company, it would be a stock that is inconsistent and is struggling, something like a Beyond Meat, something like a GameStop. So the fact that the shorts came back in and have been hitting it and beating it up, in my opinion, I am not surprised at all. U.S. spending on game software, hardware, and accessories fell in November but rose in December and January. Wedbush analyst said GameStop's bottom line should benefit from recent cost control measures such as store closures. What I say, the profitability is going to go up, but in my opinion, the revenue is continuing to struggle. But they also say GameStop continues to face obstacles to its return to sustained growth, including the mix shift of game sales from physical to digital, the growth of subscription services, including wallet share for microtransactions. But they also mentioned that they're potentially, well, obviously, in my opinion, they're losing market share. But there was another article as well. Sales of $2 billion, which imply a year-over-year decline of about 10% despite an extra week. That's what I mean. In my opinion, even if they meet or slightly exceed that revenue number, in my opinion, I don't know if I would really view it as a green flag. Yes, you might immediately have a reaction, from like 15.30 up to like, 16.5, 17 or something. So if you roll the dice, you may end up making some profits here. But in my opinion, again, to beat that number, I really don't view that as a big positive because, again, year-over-year decline of about 10%. It expects EPS of 25 cents, an improvement of 16 posted a year ago. Consensus estimates of 30 cents a share. So even with closing locations and cutting staff, they may potentially come in light on the EPS side. And now if that's the one main positive that people are viewing as the number one priority and catalyst as to why we should supposedly bring the stock up, if they happen to miss on the EPS side, then obviously, in my opinion, the stock is definitely going to get decimated. But, quote, GameStop appears set to deliver solid, if unspectacular, fourth quarter results. GameStop scheduled to report. Overall industry sales were up modestly in the quarter as declining hardware sales were offset by software releases. Benefited from these wider industry, quote, continued losses in market share and a mix shift towards digital likely led to underperformance. This is what I was saying, in my opinion, back like the end of November, the last time they posted earnings, and we took a look at the stock. Technically, with this shift to digital and the fact that you can do everything through the console and you have these other third-party softwares, third-party software programs, platforms, things like Steam and Origin, right? We can make purchases of other games without having to go to GameStop. And this was my main driving point when I first, last, and any time I look at GameStop. In my opinion, there is nothing proprietary about this company. It's almost like a Radio Shack, right? It's like there were locations, you could go there and you could buy stuff, but at the end of the day, there were other competitors, people had better prices, then there was the rise of e-commerce, so places like Radio Shack ended up going out of business. Even something like Circuit City, right? In comparison to Best Buy, that looking at a place like, I know Best Buy, a little bit of a different story because I know they have like a couple of brands under their belt and whatnot, but the point is it was essentially a place that sold other people's stuff. So with new options coming out, there is essentially no need to go to these places, right? Think about JCPenney, same thing. That company went out of business. What did they do? It was a big retail store that sold everyone else's other stuff. And then when these companies started to enact direct-to-consumer sales, and more importantly, you had e-commerce, just being able to buy everything off of places like Amazon or Walmart.com, at the end of the day, you didn't have to go to a big retailer like JCPenney and pay a slight uptick premium so that they can make their profits, right? You understand what I'm saying? So at the end of the day, the question is, do you have to buy this, quote, ABC new game title from GameStop? And the answer is no. You can buy it elsewhere. So that's why I'm saying, in my opinion, that is their bread and butter business. And because it is not proprietary, I'm basically agreeing with these analysts here that they're losing market share. And again, you're seeing the shift to digital. So it just doesn't seem like a necessity, in my opinion. Industry-wide hardware sales decline, led by the Switch. 9% year-over-year decline for its sales. PS5, okay. GameStop bottom line should benefit. Recent control measures like cutting stores. Wedbush reiterated its underperform rating and a $6 price target, pointing to GameStop's ongoing obstacles to, quote, returns to sustained growth. Continue to trade at a level that fails to fully account for the many challenges ahead. What am I saying? What am I saying? Growth of subscription services and, quote, the lack of a clear strategy to enter new categories with compelling growth potential. That's why I said, in my opinion, yes, it could be a big gamble. And yes, they may deal with some negativity for a couple of quarters or even a year or two after. But in my opinion, I said that they should really start developing their own titles. If they were able to acquire some sort of smaller video game developer, they would actually be able to release their own titles and they can make them exclusive to GameStop. Oh, you want to buy this new game we came out with? It's only sold at GameStop, right? In my opinion, they need to do something like that to bring back their market share and beef up that revenue again, because as we're seeing here, it looks like they're trying to lean more towards the profitability side to increase that up, when in my opinion, it seems like the overall business itself is shrinking. Wedbush does not expect GameStop to provide guidance, since the company has not provided sales and earnings guidance since 2019. In my opinion, massive red flag. Expects full-year revenue of $5 billion, EPS of 4 cents, below Street's view of $5.2 billion and 12 cents per share, respectively. So for the year, expecting a little bit of lightness here. But there was another one here. Yep, talking about Ryan Cohen here. Hold on. Beaten revenue estimates in 2 of the last 4 quarters, but only 2 of the last 6 quarters, right? We spoke about the inconsistencies. Bear with me. Underperform rating, $6 price target. In my opinion, I actually agree with that. We can go back to the chart in a second. I believe I have a key level of 559 drawn out. Analyst said GameStop saw weakness in software in the 3rd quarter. Outperformance in hardware, right? Which leads me to believe, potentially, in my opinion, anyone who specifically went to GameStop to buy a Switch or a PS5 or whatever probably already made their purchases, right? So we don't know for sure if that's going to roll into the next quarter here. Could see a change how the company uses its cash. Look, GameStop shared in a filing it will allow CEO Ryan Cohen to invest the company's cash. The company said it has traditionally invested its, quote, excess cash in short-term fixed income securities, right? Fixed income, which means it's essentially, in theory, a stable investment that generates some sort of fixed, and you could make the argument that it could be guaranteed interest, which is why something like that is understandable. And now you see on December 5th, the board of directors approved a new investment policy that permits the company to invest in equity securities, among other investments, GameStop said. The company also stated that Cohen will oversee its investment strategy in both public and private sectors, potentially targeting the same companies in which he has personal investments. In my opinion, I cannot understand how this is not a conflict of interest. I don't even know how this is allowed, in my opinion, but apparently CEO is able to invest excess cash of the company now. He has that green light, and apparently he can also invest into, as you see here, investments that he's personally holding. So, I mean, I don't know, that could be a positive in my opinion. I actually view that as a negative. Said GameStop should buy back company stock instead of the new investment strategy. I potentially agree. However, the problem is, as you're going to see here, that they basically say that it's not worth investing into. The analyst said that GameStop previously issued 30 million shares at $50 and now thinks the stock is too expensive to buy back at $15. Quote, the board clearly believes GameStop stock is a lower return investment than other market opportunities. That is the definition of, quote, underperform. So I'm happy to see that they agree with me. And I agree with this person. I will say that, in my opinion. We'll be looking if GameStop invested the company cash in any stocks or private companies. Hear about future growth. Not held a conference call for several quarters. And we have, as you see here, a sell. We have an underperform rating. Maintaining sell, it looks like. But see, now this is interesting, right? Because now we can potentially swing both ways. First of all, I already laid out the argument that, in my opinion, we have a company that is getting hit. They're dealing with some obstacles. They are seeing declines again year over year. This 2.05 billion, 10% decrease in revenue, as you see here, reported 2.23 billion this time last year. Now expecting 2.05 billion. So on paper, in the numbers, the company is shrinking, right? And that's not really my opinion. That's more of a fact. But I will say, in my opinion, it seems like the company is shrinking to me, right? But now, right, we just made the argument that the stock could go down. Now, apparently, you have this guy who just has carte blanche, and he's able to, who knows where they're looking to invest this money into. And now this, in my opinion, now throws a wrench into the cogwheels, if you will, of our machine, and now throws me personally for a loop, in my opinion, because I still lean, in my opinion, I have about 90% conviction that chances are the play is GME puts here. I'm very, very confident in that call. However, on the flip side, we've seen how nonsensical, if you will, a lot of these stocks reacted based on other investments, right? We saw Nvidia had about 3 million in change invested into SoundHound. I made the update. I thought the SoftBank position was much, much more positive, but people saw that Nvidia had a stake in SoundHound. That was it. The stock was off to the races, and it rallied like 400% off of that momentum. So now what I'm thinking is, if this guy Ryan Cohen, if he was smart, if they did make these investments, think about if they release now in the filings that they have a position in a stock like Nvidia, right? Think about now if they release in these filings that they invested or are looking to roll this excess cash into something like a Bitcoin, right? Now, what'll happen is not necessarily the business will change itself. The problem is now the psychology of trading the stock is going to change. So now you're going to have a situation where, yes, we're dealing with a potentially dying company, but on the flip side, because they invested into Nvidia, if Nvidia goes up or makes a positive announcement, GME stock may rise, right? Or on a day where the markets are tanking, or GME may potentially get downgraded or something, let's say, hypothetically, if they invested into something like Bitcoin, and Bitcoin's up 3.5% that day, you may actually see GME stock go green that day, even though they just came out with a negative catalyst. You understand what I'm saying? So it may be a little difficult to try to time this earnings play because we don't know what this guy is invested into or where he might invest this cash. But again, if you're asking me, in my opinion, where do I think the stock itself should go or will go, in my opinion, it should be lower. Again, we have this big downtrend, and I know we split, so it threw the numbers out of whack, but you can see right here the last recent high, 559. That, in my opinion, was the level that I feel the stock will eventually get to down here at sub $6. So that guy at Wedbush over there with the underperformed $6 price target, in my opinion, I actually wholeheartedly agree with that individual. And I think that is actually a more decent analytical report that I've seen from an analyst in a very, very long time. But in my opinion, again, GME, it really does seem to be struggling as a business. So even if they announce, oh yeah, we put a couple of million in Bitcoin, it's like, yeah, you might pop and drop them now with Bitcoin. But again, the overall underlying principal investment of GME stock, in my opinion, will continue to go down. Right here, bottom Bollinger Band on the daily, 13.15, in my opinion, that is probably where the stock is going to go if they report some light EPS or revenue. But again, even if they happen to beat this quarter, they can potentially signal for future obstacles to persist and remain. And that's why, again, in my opinion, a situation like this, any little slight negative, and the stock is probably going to take a schmack. But down there at 13, in my opinion, I actually think that may happen. RSI up here at almost 60 here off of this recent bounce going into earnings. MACD looks like it just crossed to the upside. But again, we have earnings coming out, so we can't really use these as some leading indicators for us. MACD staying above slightly on the weekly. We just got above the mid-Bollinger Band there, 1484. We pop back up to 15 and a third. If they beat, I can see, or if they announce some sort of positive news, I can see them going to about 17 and a half and getting back to the top Bollinger Band and potentially retesting that 50-day moving average on the weekly. But overall, in my opinion, GameStop just really seems to be struggling, so I would probably go with GME puts. Now, BIOR, of course, the last time we looked at BIOR Therapeutics, ticker symbol BIOR, I pointed out that, in my opinion, I don't remember exactly what I said, but I know we were looking at technicals. It looked like there was a potential descending triangle forming. I mentioned that. And then, of course, right after, it happened to pop out and explode up to $2. Since retested the fib there at $1 and has slowly been ticking up higher here at 128. So let's see what's going on. Further reduces net debt, monetizes legacy asset, brings in $3 million. Convertible notes, 2.8. Non-dilutive funding. Reduced debt by more than 80 million. Minority ownership stake. On March 8th, sold its stake for $3 million. I just don't know. Was it here? Yeah, successful completion of single ascending dose. This was the news that happened to come out. Bear with me. Exciting step. We are pleased with the execution of the study. Yeah, I mean, again, I wasn't necessarily knocking the company. The problem with these situations are you can essentially see like a consistent, steady sell-off and potentially run into reverse stock splits over all these months and all these years, and then boom, all of a sudden one day there's positive data. There's again, FDA approval or something like that, and obviously the stock would explode. But and it does seem hard to time with a lot of these situations. But a company like BIOR, if you want to take a shot down here at around $1 and change, obviously it's your money. It's entirely your own prerogative. You got a market cap here of a touch below 35 million. The losses are extreme, even when they beat. Yeah, we have no revenue. They just brought in 3 million. What are we expecting here? Loss of 59.5. I mean, that would be a big jump. But technically, no business. Is there any other news that I'm missing here? Let's see. They provided the outlook for 24. Let's see this again. We completed transfer focus. We begin 24. Yep. Which will be a major de-risking step. Okay. But we don't have a time frame, do we? Increased interest in the platform. Okay. Right, they were talking about, potential non-dilutive funding from those partners. Initial data expected in 2 to 3 months, and this was, Jan 16, and then... Wait. See, it said in 2 to 3 months, but it was about 5 weeks, right? It was February 26th. That supposedly these results came out positive. Phase 1B. $56-day plan to begin in second half of 2024. anticipated throughout 24. Honestly, it's hard to call. And again, I know some people may want to beat me up for that, but I mean, again, technically we have no numbers, right? I mean, so we're going off of, did they lose this much per share, or is it going to be wider or more narrow? And on the flip side, are they potentially going to announce something positive, right? So obviously it seems a little difficult to call, but where's the debt? Yeah, debt's been coming down. It's about 130 down to about 82. So, jeez, look at those liabilities. They have been ticking down, but these assets, look at these assets now going back the last 18 months here, from 86 million down to 34. So you lost about 50 million in assets, or we'll call it about 60%. And liabilities dropped about 25 million. About 15%. Yeah, I don't know. I don't know. Like we said, we looked at that article before. They said they were looking for stuff in the second half of 2024. So, in my opinion, I would be wait and see. I really would be wait and see. Of course, that positive data, of course, that's great news, of course. But again, now we're having a big jump up in that loss here, up to, again, about about 60 cents a share. And you can see last quarter was supposed to be 93. They ended up missing. And even before that, you can see the losses on the beats. They actually posted a loss of $1.59 a share, a loss of $1.47. On this miss, $1.61 on 138. So I don't know. In my opinion, even if they post in line or slightly more narrow here on this minus 60, based on the 80 plus million debt and again, the way the liabilities are staying up with the assets going down, I think that, in my opinion, you may potentially be able to get this for a better price. And I would actually wait maybe for $1 and that sub-dollar re-entry. But again, that may potentially lead to a reverse stock split. I don't know. But at the end of the day, if they release positive data and you are able to stomach the short-term volatility for the long-term growth, then if we do see value here, in my opinion, market cap 35 million, I mean, of course it could get worse, but it may be worth taking a shot here and tucking some shares away for the longer term. But I will say this, in my opinion, if you're very tight with your liquidity and you're trying hard to grow your account, and let's say you're in a position where you really can't afford to take losses, right? In my opinion, you can probably find a better situation than BIOR Therapeutics. Again, not bashing the company, but I'm sure you guys can appreciate what I'm trying to say there. So if you have a little excess, again, and you're interested in the company and you want to see if, a year or two from now, if it pays off, then by all means go for it. Obviously, it's entirely up to you. It's your own prerogative, but in my opinion, for a lot of the smaller investors out there, those of you who are struggling, in my opinion, I think you can have quote-unquote more sure bets, in my opinion, with some other situations. But here on the weekly, we can see RSI about 43. The stock slowly ticked up. Actually, looking like a potential bull hammer right there on the weekly. But again, we have earnings coming out, so we can't solely look at technicals. But we could potentially rise up to $1.54 here, depending on what they report. High 129, stock at 128, so it could potentially close at the high and form of the bull hammer here on the daily again. However, in my opinion, I really do think it needs more time, and I know people were pumped about this data, and the stock jumped up to 2, but like I always say, if it was worth 2 or around 2, it wouldn't have immediately given it back and gave that value all back and dropped 50% from 2 back to 1. Now, I understand it's been slowly climbing and trying to hold above the mid-Bollinger Band, but again, in my opinion, I think that's more positivity and hopefulness going into these earnings, because we knew that earnings were coming out. So I don't know if I would really follow these technicals here. In my opinion, I think it actually breaks, and that's why I'm saying even if it drops back down here and then slowly starts to climb back up again, like it's been doing, in my opinion, I just think you may have a better opportunity to get a more attractive price, right? We always talk about pricing and timing. In my opinion, I think you may have a more attractive price. And then again, if you want to step in at those low 1 levels and you want to tuck it away for like 9 months, 12 months, and wait for that second half of 24, hoping more positivity comes out. And again, it's entirely your own prerogative. In my opinion, I probably wouldn't play this one, but it was basically this and GameStop that were some names that we saw, that we looked at, that are reporting earnings today. So again, earnings 100% a gamble. Please understand the risks involved. If you get involved or are involved with one of these companies, of course, I wish you nothing but the best of luck. But in my opinion, BIOR, I would be wait and see. GME, I would buy puts. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel, right? And subscribe to the channel, of course. That is how you help me help you. But more importantly, moving forward, like I always say, I understand markets are rocky and volatile and uncertain. I want to wish all of you success. Hope everyone makes a couple of dollars. Best of luck to you. Thank you for your time.